Okay, so this is the Orderflows trade analysis for Wednesday, July 6, 2016. My name is Michael Valtos. I'm the founder and trader at Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so today was Wednesday, July 6th, and it was it felt like kind of a quiet morning. You had the FOMC minutes coming out later in the day. And, although, market really wasn't expecting much out of it, honestly, sort of what came out of the minutes was expected, FOMC saying, oh, we want to see what impact Brexit's going to have on the market. But nevertheless, the market, is still open, still trading. I I'm not running the trading room this week. I just need a little bit of time. I'm just taking this week off. It's kind of a shortened week. We got non-farm payrolls on Friday, and obviously Monday was a holiday. Usually I'm not trading on non-farm payroll. So, it's only really realistically 3 potential trading days for me this week. But, that said, I still watch the market. And, this morning, there was a trade I took, after the cash open. Now, I like to wait for the cash to open, then, make my trades. Why? Because that's when, once the cash opens, that's when, you're going to get majority of the liquid hitting the market. Majority of the liquidity in the volume hitting the market. And so we opened at 8:30, and I got, we rallied, we sort of came into, 8:30 is right here. We sold off a little bit and then rallied. Actually coming into the cash open, it did look a little bit bearish. You got ratio here, ratio, and we started to sell off. Then we turned around right here at, that's 671 3/4. There's no ratio there. Then you get ratio. Then we hit this high here with another ratio. And it was a nice enough move for me, and I felt, hey, this is a chance to get short. I wanted to get short in this bar. I missed it. I missed my opportunity, and I got short in this bar at 4 3/4. Really, I was looking around this level in this bar. By the time I was able to get my order in, we're trading down here. We pulled back up in this bar to 4 3/4. Popped up, I took a little bit of heat, we traded up to 5.5, so, I took in 3 ticks of heat, and then we started making that move lower. At first I was just going to go for 2 ticks. I was looking at 2 3/4 as my take profit, which is down here. Then we sort of came in here, and I see, the delta is getting stronger, 150, 475, 800. You got a ratio here, so, I backed off. I backed off to 1 3/4. We pulled up. You got this green bar here, and then I see, again, it starts coming off. At this point, I backed off from 2 3/4 to 1 3/4. And then I see, again, delta is getting, decent. 160 is not decent, but, 550 is very strong, and I got a ratio there. And, I got a ratio here. So I backed off to, 70 1/4 down here. 70 1/4 actually happened here, but it showing up there. And you got 3 ratios in a row. Boom, boom, boom. This is another setup that I like. This is the 3 in a row, the 3 ratios in a row. To me, this is, a short, I'll say a good short, but, it's a potential short. I'd be looking to get short somewhere around this point of control here at 2. But you know what? I'm already short from 4 3/4, so I don't need to. It's a nice continuation. So if anything, once I see this happening, it's telling me I could probably back off a little bit. I backed off to 4 3/4. This happened, big sell order hit the market here, and that's why you're seeing it print there. And you got the stack selling imbalance right there. But like I said, if you could have gotten short here, even if I wasn't short up here at 4 3/4, you get this 3 in a row, you get this bar, pull back up to this point of control. It's a legitimate trading opportunity. Anywhere between 1.5, 1 3/4, 2. And what do? We trade down to 69.5. It was really good. It was a very fast, very quick move. Boom, we hit there, bounced up. I'm out here. You got this stack selling and balance here, but I'm already out at 70 3/4. So it's a nice quick 4-point trade. I mean, that's 4 points. That's on 5 lots is 1,000 $1,000. And we just sort of go sideways here, nothing much happening. We did, come back down lower. So, even if you're in this trade here, if you're getting short, it's, let's call it 71.5, 71.25. We trade down to 69.5, just sort of go sideways. Yeah, we traded back up, up to, what is that? 72, which is the initial, which is the point of control, which is your entry for the trade. Ideally this would be your entry. An aggressive entry is in here at 1.5, and we trade right back up to it, and then we make that move again down. Again, I'm not looking for a move, to happen, rally back, and then another move to happen. But if I wasn't in that trade, I'd be looking to get short, in this bar. And, I'd be looking to get something out of it. This one, it made the initial push, rallied back up, so I don't know what I would have gotten out of this trade. Honestly, if I got short somewhere in here, say 1.5, it made that push down to 9.5. That's a 2-point move, then just sort of starts going sideways. I'd probably be getting out here at 70.5. I wouldn't be expecting it to rally back up to my entry price, and then rally, then sell off, rally back up, rally back down. That doesn't make sense. Now, what I'm saying is, you have your signal to get short in this bar, and it makes the move. And then it comes back up to your entry level. Don't expect the market to rally back up to your entry level and give you the trade all over again. Yeah, it happens as much as it fails. I prefer not to do that. Realistically, I'd be getting short somewhere in here, looking to get out. Obviously down here, if I couldn't, then once it starts rallying back, I'd be getting out somewhere in here around 70.5, 70.75, worse 71. But I wouldn't expect to. I wouldn't be sitting there in it. I mean, I probably wouldn't. I wouldn't say I wouldn't, but chances are I wouldn't let it come all the way back up and then expect the move to make it back down. Because what's going to happen is makes the move, starts to rally back up, and then just keeps rallying. Rallies past your entry. I don't like it to come back to my entry and then make the move again. Then I took another trade, not that much longer after that. Where was it? It was here. This was, we sort of, this was that level, 68.5. We hit it here, and then we hit it again. We got another ratio. We got this, it started to pull away. I started seeing some, some signs of positive delta here. I got long at 69.5, which is right here. A little bit of a pullback. I probably could have gotten a little bit better entry at 9.25, but whatever. I got in at 9.5. This trade I was expecting a little bit more. I was expecting a nicer rally up and above 72, 72.5. And I had a 2-point stop on this. And we came right down. I almost got stopped out on this trade. We came down along at 69.5. I'm looking at 67.5. Just down here is my stop. We got down to 68 before turning around and going back up. People are going to say, well, you got long at 9.5, out at 70.5. Your risk reward is all messed up. Well, it's not. I'm giving it a chance here, and I give it 2 points. If it's going to get down there, I'll manage it. Honestly, it came down here. I wanted to see how this bar was. If this bar was just nothing, it had a ratio, but if it was just sort of a nothing bar, I might have cut it. Even though my stops, my worst case scenario stop is 2 points, but I'm still managing the trade. I don't always let the trades go and stop me out. If it just doesn't look like it's working out, I'll get out. Then I lowered my offer down to 70. I thought of 71. Then I thought, I'm just going to go in at 70.25. I took it down from my initial things because I was really looking for the move to happen here. I wasn't looking for it to sort of come off and then make the move. I figured if it's going to come up, I can get something out of it. And I got a point in it. I got 5 ticks out of it. I got a point and a quarter out of it. So yeah, people will say, what, you took heat all the way down to 9.5. You took 1.5 points of heat, and you only took 1.25 tick profit. Well, I could have got a slightly better exit, but you know what? Part of trading is making decisions, and I know my risk level is here, worst case scenario. But again, like I said, if this didn't look like it was, if there wasn't a ratio here, if it's just a normal green bar, I probably would have cut it. I probably would have cut it, somewhere around, 8.5 if I could, or 8 even, rather than let it go all the way to my stop price. But this one worked out all right, and it came up, and then we just went sideways here. Popped up to 1.5, but for the most part, we're just going sideways most of that morning, or sorry, after the trade rather. It was an interesting day. I mean, those are the two trades that I took. It's kind of a we want to call it, an interesting, I'll say, kind of a boring day. It's you got non-farm payrolls on Friday, right? So, even though we settled up today in the market, I think all eyes are again going to be back on this non-farm payrolls to see what the number is going to come out at. If it's going to be abysmal, like how it's been for the last several times. It is a tight job. Tight. It's a very difficult job market out there, and I don't think the Fed really understands that. I think they're trying to make everything not as bad as it seems for political purposes. So those were the two trades that I took today, and they were both winners. It's not like I took other trades and I'm not showing them because they're losers. I didn't take any other trades. I could show you the rest of my charts for the day. You don't see any other trades here, right? There's some nice. This is a 3-range chart, by the way, which I've been playing around with a bit more as opposed to my normal 5 and 10 range charts. I think I've been liking it. This is the first time I really sat down and trying to trade with it. There was some nice signals. Here was the price rejector here up to here, and then you sell off. And this is the nighttime here. So you can see that those are the only two trades. I'm not like just showing you the only winners of the day. Those are the only two trades I took today. Okay, so thanks for watching this video. To learn more about the trading software used in this presentation and how you can profit from order flow trading, visit my website www.orderflows.com. And the software, it runs on NinjaTrader, so it's very easy to use. You just download NinjaTrader for free. You get my software, you can throw it on there and start trading. I include all the templates and everything, so give it a try. I think order flow trading can help a lot of people that are sort of on the borderline of making a profit, turning a profit in their trading, that aren't necessarily sometimes people feel like they're just missing that one piece. They're there, almost there. They're sort of break even, have days, winning days, losing days, but order flow, I think, can push you over the edge and help you become a profitable trader in the long term. So thanks for watching this video, everyone. Bye-bye.